the biggest things going on right now is 70% of CPAs are set to retire in 10 years.
Oh, wow.
So it's huge. Now there's so many firms that are going to be gone. They're either going to dwindle down and the clients have to go elsewhere, or there's going to be a lot of acquiring going on. But wealth managers are licking their lips at these firms.
Hey, what's up, everybody? Welcome to the podcast. Super excited here in sunny Southern California here at SoFi Stadium. Absolute beautiful day. It could not be any better to spend time with friends, and we are so thankful that you are spending this time with us. We are so fortunate to have with us Matt Bontrager, and he is going to be teaching us all kinds of amazing stuff about the biggest problem that all successful people have. You know, what happens is we get locked in on making money, serving people, filling our books, and then all of a sudden we have that first big year, and then you get that worst ever conversation. You know, that, hey, so I've got good news. The good news is you've done really, really, really well this year. And I also have some bad news. And that bad news is you owe X. Well, listen, let's not get ourselves into that situation. If you can spend some time with us today and with Matt, we're going to help you to shortcut that so that we avoid that situation. We don't sneak up on you with Uncle Sam and his hand reaching out to you saying, where's my money? So many great things that you could be doing right now to put yourself in a position to be in an incredible spot. So let's start, Matt, with what is for you the number one biggest thing that you have coming in today on your mind that you're thinking, man, entrepreneurs, they just don't get it. And I'm sure you have this privately, but we're asking you to publicly share. What is your frustration point with entrepreneurs when it comes to their financial management and taxes?
So it's really two, but if I had to chalk it up to one, it is bookkeeping. And it's because tax planning is sexy. That's how you save a lot of money, and there's a lot of stuff you can do there to obviously keep more of your cash. That's people's goal at the end of the day. But what they don't understand is the milestone to get there is to keep track of your numbers. And so the problem is, as a tax strategist or a CPA, people will come to me and want to plan. But to sit down and plan, we need to see numbers of how your income is going, how your business is doing. And they don't do that part. And so it's the simplest, and it's the, you know, the part that no one wants to take the time or hire out to do that really crumbles them in the end.
So no shoebox.
No shoebox of receipts. That's usually the joke that we make. Yeah.
Okay.
No shoebox. Usually like a QuickBooks or something.
Did anybody else notice he said tax planning is sexy? I don't think I've ever heard
Yeah, I caught that.
I was like, wow. I mean, you
In
really
his
love
world,
what
it's
you
extremely
do.
sexy.
Yeah, right? That's where you
I
save
like
the money.
it. I like the energy around that.
Compared to bookkeeping, it's extremely sexy.
Well, I want to get everybody's take on this, because this is great. That was a great thing to start with, because I am a big believer that we need to be in great relationship with our money.
Right.
So I'm sitting here next to my wife, sitting here with one of my best friends in the whole world. Can you imagine if I never spoke to either of these people and I just see them and I'm like, hey, I haven't seen you in a year, what our relationship would be like? In order to be into a relationship, we have to have contact. We have to have connection. But so many people, you brought this up, when it comes to their business and their books, they prefer to disconnect. So oftentimes with early stage entrepreneurs, listen, you're totally fine saying you are an idiot. Not Dave, not Lacey, I'm the idiot. But I always tell entrepreneurs, I think it's actually a good idea. Obviously, you need some counsel in getting set up, but I think it's wise for them to actually do their own books in the beginning so that they are forced to be in relationship with where they are.
I would jump off this. I'm so happy with that. I agree. I think that at least for the first 30, 60, 90 year, 2 years, something, because then you get to learn how your business operates. And I think, as you said, people are just too scared to see the reality of, they feel that the cash is coming in. They know that they're spending a little bit of money, but they don't really just, I think it's a mix. They don't want to see exactly what's going on and kind of face that. And they prioritize everything else over that. But I agree 100% that all business owners at some point should do it themselves. Yeah.
Because I think it's interesting, because what I do notice about money and taxes is when people feel like they don't have a good handle on it, or maybe they're not necessarily where they want to be, they actually avoid it more. Totally. And whenever you're having trouble in any relationship, that's the time where you devote more time, energy, and effort into it. So I always tell my clients, like, if you feel like you don't have a good handle on your money or your taxes, that's actually the time where you lean in and get to know your numbers better, right? You figure out who you should work with. You think about the strategy instead of avoiding it because it feels painful. So do you see that people do that often, or?
100%. And it's funny that you say that. So like the same way like a relationship, my wife and our 3 kids, if me and my wife are tiffing and it's quiet and it's 10 o'clock and my kids are down, the same way that sometimes you don't want to walk into the room to talk to your wife about what's going on, the same way you don't want to sit down with your bank statement and look at your transactions. And so I think it is just getting past that hurdle and actually doing the activity, because 15 minutes in, you're going to be happy that you did. And as painful as that first 15 minutes may be, what's on the other side of that is a benefit to you. So I think just getting past that hurdle.
And this is attributable to my mathematical equation of luck, which is what you pay attention to plus what you give intention to equals the coincidences that you want, the results, consequences, or outcomes that you desire, or better. People have 2 fears when they start a business, and it causes anxiety. One is opening mail. Like people don't. When you start a business, you don't want to open mail.
Totally.
And then 2.
Unless you're a healthcare providers and you get insurance checks.
Yeah. But they still, even those people have their own bills, and then they're like, spam and their fears of like, what's this? Right?
Totally.
And then 2, and I'll go even easier because of technology, and that's where my question lies, is I used to, and I went bankrupt, and I used to tell my wife, because I was just afraid to look. Like I wasn't, she would say to me all the time, you're not paying attention. You used to when I first married you. It drove me crazy because you literally were OCD about like, and I used to tell people, I'd be happy if my bank account went up $1 and sad if it went down $1, even though it was like millions in there. But at least I was on top of it. And then because my identity was so closely tied, I didn't want to see it. But because of technology, I think entrepreneurs are under a misperception that it's really difficult to see your transactions or to collect your trade. You guys talk about a shoebox of receipts. Let's be honest. Nobody even prints receipts anymore.
Right.
But, getting a mentor and setting it up correctly, and you would be that type of mentor that says, look, here's how you set up from the start correctly, and technology will take care of itself. But you need to look at your balances today. And so I still, far beyond years of experience, it's part of my non-negotiables, a minimum of 10 minutes to check every balance of every account I have, personal and professional. Because when you have that relationship, even if you're not looking at all the transactions, you just get a feel.
It's your gut.
And you're like, wait, there's something wrong here. And my guys on my team will freak out because like, how is it that you knew that was off? I said, because I have a daily feel for that. But I want to get to the technology question, because you started when it was boxes of receipts. How easy is it for today, comparatively, for an entrepreneur to be able to have systems where all they really need to do is check the balances, because a P&L and a balance sheet can be created in 2 seconds if you set it up correctly?
I just did this on Friday after golfing with a close friend of mine.
Why don't you invite Sean in?
Just on Friday. Anytime,
Don't
come
call him
out to
Shake
Vegas.
Dilly for nothing. I now found out.
Vegas.
Okay, Vegas.
We're going to
Okay,
Vegas
yep.
soon.
Yeah,
we'll play Shadow.
I was born and raised there. Yeah,
There
that's
you
where
go.
I'm from.
Okay.
Yeah.
Or I'll get Ryan Pineda as a fourth.
There you go,
We'll
yeah.
take his money.
Yeah. I like it.
You hear that? We're coming after you.
Friday, we just did it though. So my friend Kyle, he's a financial advisor. His wife goes out, starts a consulting business, just left like one of the casinos. It took us 45 minutes to dial everything we needed in for her QuickBook file. And that was to what you're saying is, it's a software that keeps track of all of your transactions. It pulls them all in for you. Gone are the days of collecting your receipts and sitting down with a spreadsheet and logging everything and then, adding it together. You have softwares that do it for you now. And that's where even a step further is every morning I get emailed my cash balances, because then it starts to give you that feeling if something's off. If for the last 10 days you're trending at 150 grand and you wake up one morning and you're at 85,000, something's off. So again, I just think it's people avoid it when they're going to get so much more benefit and better feeling just rushing into the fire for a minute.
Let's go a little bit into the weeds. I always say, and again, welcome to disagree. Being in business and then consulting with other entrepreneurs, for some reason, most entrepreneurs initially find their accountant at a networking group.
Yeah.
Totally.
So you get your card, you just get your account, and then you're like, because you feel like, oh, we're going to trade business. It wasn't even like a thought of like, you're the best person. But you mentioned tax strategy.
Yeah.
So typically, this person I met
Sexy part.
at the net,
Sexy
yeah,
part.
sexy. They meet
Yes.
at this networking group. They just call like, maybe March 15th, and we start
Yep.
getting, next 30 days of the run of the CPAs, burning the candle at both ends, file my taxes, and then we're done until next year. But you said tax strategy. Once people hear that, wait a minute, there's strategy, then that shifts their relationship, and gone is the networking based accountant, and now they're starting to look for someone like yourself. For anybody who's in that boat, they're a current accountant, they met at a networking group.
Yep.
Explain to us, what do you mean by tax strategy? Why is that different than just like running my numbers up into the whatever program you're using and sending me my return on April 15th?
I could talk about this question for 10 hours. First is, the old historic way of handling a relationship with a CPA was, you're going to send in your documents in March and April when tax season comes around. And if you have a question, you'll lob it in. You're going to email them. They'll maybe give you a call back for 10 minutes, but they're not going to really actively help you think through that. Tax strategy, or an advisor, is somebody now that you're engaged to that's going to look at everything you have going on and actively meet with you throughout the year to just plan for your taxes. So, hey, you're starting a business. What should the structure be? Should you have employees or should you have contractors? And actively try to find ways to cut down your tax bill. And so I think that people are so used to just having a tax guy or a tax gal that they just send documents to, that I tell people that not only when you start to make money as a high W-2 earner, or anytime you go out and start a business, or like, let's say, have a rental property, your complete tax landscape has changed. It's a 180 now, because now you can take deductions, set up retirement accounts and things like that. So I think you need to make the jump to an advisor when you have a rental property or a business, or start to make, let's say, 6 figures. And you're right, it's not going to be someone maybe at a networking event. It's going to be somebody that helps your industry. I specialize on real estate and basically like digital marketers and like new age businesses. I'm not an expert in international or, oil and gas and stuff like
New
that.
age like crystals, or new age like starting
Mushrooms.
out?
Like new businesses,
Yeah.
right?
New
Yeah, new
businesses,
businesses. Yeah, new
startups.
businesses.
Like
yeah.
young kids. State and
Yeah, new businesses. So then it's like, you want to find an advisor that can speak your lingo. I went into
Yeah.
real estate because I was an investor. I spoke the lingo. So finding an advisor that's actually within your industry is another step that a lot of people don't, and they're scared to interview them. Like, they're
Smart.
scared to ask them questions like, hey, do you help clients that are in my similar situation? You need to know those things as you're starting to form a relationship. Your CPA is one of the closest people you should be, close to as you run a business. So.
And I always tell my clients, like, you need to pick a couple of CPAs and interview them all and see
Totally.
which one makes sense for you. But I have my series of questions that I tell them to ask, but I'd be curious, what 3 questions do you think somebody should ask a CPA when they're interviewing them to see if they're a good fit?
The first one is, what is your communication preference? Because I have clients that want to talk on the phone, and I have clients that never want to talk on the phone, and I simply send them an email twice a year. So because that's where most misexpectations, I think, come from, is, right? Anybody that leaves their CPA, it's mostly, I never heard from them, or,
Yeah.
I lobbed in a call and they never called back. Or they shuffled me to someone else and I had to meet someone else.
It's true.
So it would be, what's your communication preference? Do you help clients that are in my similar industry? And if I had to pick a third, I would ask them what the relationship looks like ongoing, because you may come in and, let's say, meet me as a partner, and people, hey, I only want to work with Matt. And it's like, well, no, I want you to have that much trust in my team too. So I think asking them who you're going to work with as the relationship goes on is all important, because I see that's where it mostly goes wrong later on. Yeah.
Really good.
And one of the things I've learned in my relationships, and I will tell you, especially with the accountancy roll-ups that have occurred, that it's been very difficult to find someone good, that it's not just a transactional relationship. And what I mean by that is, like you said, understanding the scope of the subject matter topic or expertise of your accountant. You have expertise in real estate, so that you actually have personal experience of how to utilize the tax codes to protect the landowner and other things that it affords us. But the thing that most people don't realize with a CPA especially is the business development side of that type of relationship. So one of the things that I always ask is, I was currently looking for a new CPA because of the roll up, and when you get there and they're like, what's your name?
Yeah.
Yep, exactly.
That's not
You're
what I'm
handed off.
looking
Yeah.
for. So I ask, what types of clients, size of clients, what industries, because as much as a CPA can save me money, my CPA has always made me money because they're like, oh, you should hire Dave Meltzer to keynote. Oh, there's an extra $100,000.
Yep.
You should, right? Dave does that. Oh, there's, two more coaching clients because you're sitting there going, you're a mess. You
Yeah.
need to talk to Sean and Lacey.
Yeah.
They meet some chiropractor, and it's not just the books are a mess. It's like these people can turn your entire business around, and then you're just literally making an investment into a business development partner. How much of that type of stuff as a strategist and a partner do you do for your clients?
Oh, so one of the biggest things going on right now is 70% of CPAs are set to retire in 10 years.
Oh, wow.
Wow.
So it's huge. So for
It's so
younger
sexy.
Because it's so sexy.
for younger guys like me coming in, it's
This is a
very
great
enticing because
opportunity.
now there's so many firms that
Yeah.
are going to be gone. They're either going to dwindle down and the clients have to go elsewhere, or there's going to be a lot of acquiring going on. But wealth managers are licking their lips at these firms because it's such a good relationship. They can come in and buy a book of business like mine and then just solicit their money management services to a book of business that ideally is already getting financial services done. So there's a ton of cross collaboration between CPAs and other financial industries. But not only that, we work with real estate. What are real estate guys doing? Raising money. I have people that need to basically deploy money into these deals. So brokering those kind of relationships is huge in this industry. I like that at 32, I've finally fallen into what I feel like my career is, which is, being a CPA. And it's because of, I like doing the work. I like building relationships like that. And so all around, I'm just in love with it.
You brought up the wealth manager. I want to just get that, and I would love
Yeah.
to do that. We should maybe do this: is to get a CPA and a wealth manager in a podcast, because very frequently the wealth manager says, "Hey, so what we should do is this." Then when the CPA finds out, they're like, "No, you don't understand the tax implications of
Yep.
doing that."
Exactly.
And the wealth manager and the CPA are not on the same page. How can we circumvent that?
First, it's always preference on the client. But so Kyle, the guy that I helped on Friday, a close friend, he is all about the stock market. I'm not a stock market guy. I like real estate. So it is at the end of the day what the client wants to do and a risk tolerance and the preference. But I don't think there's a right answer. I think it's having an advisor and having both sides lay out the options with you so that the client knows, all right, if you go here, this may work for cash flow, but let's say less tax benefit. But if you go here, all right, less cash flow, but bigger tax benefit, whatever the case is. And I think it's just an option game. There's no right or wrong. It's what the client feels they want to do. I'm sure all of us sitting here, some prefer stock market, some prefer real estate. Maybe we're all real estate. So, yeah, it's a preference. No right answer, I don't think.
And I love how
But
you.
we can go at each other's necks, though, for
Yeah.
sure.
Yeah, we'll do that. We'll have a debate.
Yeah.
How you've, being young and in the industry, you've really leveraged social media to get your word out, to build your personal brand. How can people find you, connect with you, especially if they're like, I got to ditch my networking account?
Yeah. I'd say Instagram or our website is honestly the biggest way. That's where I try to grow my following and find most clients and share tax tips and give value so that my idea is to stay top of mind. When you need taxes, you're going to come to Matt in the black hat maybe one day.
Love it. Love it.
Matt in the black hat.
That's perfect. I want to know from Dave,
Good brand, yeah.
in your evolution, what was the biggest tax lesson that you learned?
It's what Lacey said, like really to look, it's just like a doctor. If something would happen to me, I want 3 opinions.
Yeah.
And so to find the right accountant, I want to know their opinion. But it's been the most difficult and trusted relationship, especially lately, which is why I was so interested in Matt in the Black Hat, is that where I'm at in my life at 56, I'm looking for someone that's 32.
Right.
My last accountant, was extraordinary up until the last 3 years when he got a big payday and was transitioning into the roll up.
Yeah.
And I knew I was in big trouble when, the new person was calling me saying, well, what about this lease in this building? I'm like, no, I own that building.
Yep.
The lease is for this building.
Yeah.
'Cause I wish I did.
Yeah.
I don't own this building.
Yeah.
Right. And so I think a lot of people, if you're in your 50s, 60s, or 70s, you should absolutely look for a young, sharp accountant that understands technology much better than the old guys, the baby boomers that are retiring. 2, that understand the communication methodologies of today and the current nature of the tax code. It changes so fast. Like my old dude, he didn't have a clue. Like with the ERC program, I just called him to ask about it. No, you don't qualify.
Yep.
$260,000 I save later because I did qualify, which
Right.
is when I decided maybe I should fire this guy for the money I'm spending.
Yeah.
Yeah, and so it's interesting because so few entrepreneurs are super happy with where they are with their accountant. It's very difficult, and it's very difficult if you are with someone that you are not happy with to leave. You
Yeah.
have
To
a
make the move. Of
connection.
Of course, it's
and-
much easier to be a trainer. Like, how many people are not satisfied with their trainer?
Yeah.
You ever, right? Like,
Yeah.
even as bad as they are, like the trainers are doing a shitty job, and they're like, but I love my trainer. I see him like 3 times a
Yeah.
week.
Yeah.
But like accountants, everyone's just shitting on him. So you got to find a good one.
Yeah.
Well, I think that's the most important thing is the relationship. Entrepreneurs, we don't typically think about our accountant, our CPA as somebody we're in relationship with. But if we just change that perspective, then we would be more eager to find the right person.
So Matt, I hope that you'll take us up on a round of golf in Las Vegas.
Of
course.
All of you, I hope that you will reach out to Matt. Listen, what could you possibly lose? You talk to Matt, find out, what could be different. You find out what could be better. If you decide to make a move or not, ultimately that's your decision and your business, but you don't know what you don't know, and it would be a shame if you never knew what was possible as far as your taxes are concerned. All right, everybody, thanks for tuning in. We'll be back very soon with a brand new episode of the podcast. You don't want to miss it.